welcome Mark.
How are you, Anthony?
Mark, you must be in your element when you see the paper full of information about interest rates and the financing and
yeah, it's been a
so
hot
on.
topic at the moment, isn't it?
Yeah. Before we get underway, just for the viewers that perhaps haven't met you, everyone's seen you on TV, but just give us a very quick précis of you and the business.
Yeah, look, the business started back in 1987, started by my late father, Bernie, and been around for 22, 23 years now, and we've got close to 100 staff across 6 offices, and we're helping around about 5,000 to 6,000 people each year with their financing. So we're out there helping a lot of people.
So, Mark, the big question that I always have, and middlemen, because real estate agents are middlemen as well. Yeah. Why wouldn't someone go direct to a bank? Why on earth would they go through yet another party?
Well, I guess it's about choice. People want to be educated and they want to have choice these days. They don't, back 20 years ago or 30 years ago, they used to go to the bank that they always banked with and go and see the manager, and basically they had a choice of a fixed rate loan or a variable rate loan. There wasn't a lot of choice then. Wind the clock forward to the present day, and you just have an absolute myriad of options. There's lines of credit, there's low discount rates, there's fixed rates, there's low doc loans, there's reverse mortgages. It's just an incredible plethora of options, and for the average person that's confusing. So to have someone hold their hand and guide them through that process, but also looking at a broad range of products in the market and really tailoring something that will suit them the best.
Now I hear that, but the interesting thing is since the GFC, so this time last year. Yeah. Where we had a period where there were all sorts of products. Realistically, haven't most of those been washed out of the system? We've only really left with 4 banks.
Look, there was a few. I mean, there's been some consolidation in the industry, obviously with CBA buying Bank West and Westpac buying St George Bank SA and that sort of thing. But they are still all out there trading under their separate brands, and they still have their separate products. And certainly we've seen a little bit of attrition in the second and third tier lenders, mainly the non-bank lenders. But there are still a lot of options out there, and whilst during the height of the GFC, there was that what I tend to the flight to big brands. So the major banks certainly did very well in that period. The pendulum's starting to swing back the other way now, and we're really starting to see some good options coming out from second and third tier lenders.
So let's get down to the bottom line. Is it more expensive to go through a broker than going direct to a bank where they don't have to pay you?
Yeah, no, absolutely not. I mean, whether you come through us or whether you go direct to the bank, you will get the same loan, the same rate, the same terms and conditions. And the banks see us as basically a loan they wouldn't have got otherwise. So they pay us out of the margin that they get. So to the client, it's all transparent. All of the commissions and everything are all disclosed. And our consultants will disclose all of the commissions from all of the lenders at the interview, just to make sure that we are being completely transparent with our clients and making sure that we're massaging the right product to the right lender. Yeah. And not just looking at what suits them right now, but what's potentially going to suit them for the next period of time.
Right. Now, let's get back to specifics about the people listening. What is your view as to what's happening with interest rates, and are we going to see that increase of 0.25% or 0.5% before Christmas?
Yeah, look,
and by the way, this is on record.
Yeah, on the record, and I've been on the record quite a bit. We did that show at the Piccadilly Cinemas a couple of years ago, and I predicted the cash rate would get down to about 3%, and sure enough, that's where it got to. So I'm batting 100 at the moment, so hopefully I can keep batting 100. I don't think we'll get a rate rise next month. I really don't think. I know it's a big call, and I know what you read in the paper today, but the figures that are out there, the economy is still, I've been saying the economy is on a tightrope. It's on a very thin wire, and business confidence is starting to come down again. Consumer confidence has plateaued and potentially, on the wane a little bit. And I think those two measures are very key measures of the heartbeat and the health of the economy.
Right. Well, we'll see, and we'll hold you to that. Yeah. Now, we've got a couple of emails that have come through, Mark, and you might like to help me answer some of these.
Yep, sure.
First one is from Helen from Hackham, And she says in the email that she's not actually been to auction ever before, but she wants to know what the implications are when buying at auction. Now, obviously there's a lot of implications in different areas, but on the finance side of it, we've talked before about the fact that it takes longer to get a finance approval now than it used to. Tell me about how that affects buying at auction for Helen. So just very quickly step me through the process from a finance point of view for Helen when she's going to buy a property at auction.
Okay, well, whether you're buying at auction or not, the first step in the whole process is knowing how much you can afford to borrow. I mean, there's no point looking at $500,000 properties if you can only afford a $400,000 property. So talk to somebody and get an indication of how much you can borrow, how much you can afford to repay, because there is a difference there between if the bank says they'll lend you X and the repayments are, $2,500 a month, you might say, well, in your own budget, I can only afford to pay $2,000 a month, in which case you need to bring it downwards. So you need to gather all of the information and know exactly what is right for you. Once you've got a figure that you can afford to buy, then go out to market and start looking. Now, if that involves an auction or a private treaty, it doesn't really matter. But the things to be aware of with auction is at the fall of the hammer, it is a cash contract. So you can't have subject to finance conditions, you can't have building inspection conditions or pest inspection conditions. So you need to make sure that if you think you need building and pest inspections, you get those done prior to the auction. And the big thing is with your finance, if you're getting pretty close to your borrowing capacity or your deposit is going to be limiting the purchase, then you need to make sure that you've got a little bit of flexibility there, because if the price you pay at auction doesn't match the price that the lender thinks it's worth, then that could cause a problem.
Okay.
So you can actually ask the lender to do a valuation on the property before the auction.
Great. Now, don't forget, we are live and interactive here right now, so ring straight away on 1-800-TOOP, 1-800-TOOP, and we'll take your call. We've still got time, but before we perhaps go into the next lot of questions, we've got a couple more emails here. Let's have a look what happened with the heat and what the impact was on the weekends. We'll go and have a look at an auction from the weekend when it was sizzling.